Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, we get a lot of questions from folks about an approach to short and long-term planning, and that is using a bucketing approach to accumulating wealth and saving for the future. So we're going to dive in a little bit today about what bucketing is, and you may may already be using it, maybe you're not using it because you don't know what it is, but it's a pretty basic concept and you may have read a lot about it. So what is the bucketing approach to financial planning? Again, it's really just looking at your money in different ways. So money for today, money for tomorrow, and money for the future. And effectively, you're just allocating a certain dollar amount to help you reach a certain financial goal. So for example, today's bucket, if you will, let's call that bucket number one, that's really for short-term needs. So over a 1 to 3 year period of time. And this is where you have safe, more secure assets with less volatility. Why? Because you absolutely need to make sure that money is there. So therefore you want to invest in lower risk investments like cash and CDs. Just a few examples of a few areas. And this bucket again is used for needs, which can be categorized as expenses for daily living, as well as current and future protection needs. So that's bucket number one. Let's call that today's bucket. Bucket number two is, let's call that tomorrow's bucket. So that's money earmarked for the next, say, 5 to 10 years. And, in that bucket, as an example, these are what we would call as wants. So for example, if you want to accumulate some funds for a luxury SUV, or maybe even if it's buying a second home or a vacation property, this is where, again, if that time frame is 5+ years, this is where you'd allocate money for those types of needs. So again, these aren't investments that always show up in bucket number two, but they are dependent again on your individual situation that's driven by your goals. So these type of assets would include maybe some things, again, like bonds. You can maybe even invest in dividend paying or even preferred stock. So you're going to go a little higher up on the risk scale here, again, because you have a longer time horizon. So again, that's tomorrow's bucket. The third bucket, if you will, is for the future. Let's call that bucket number three, a 10+ year time horizon. Of course, depending on your age and your general time horizon, you could mix these a little differently, but this is a general overview. So bucket number three, again, your future dollars. This is, of course, as you would assume, money in your longer term, riskier pool, if you will. So these funds, you're not going to worry about day to day. So they theoretically would be more volatile, which of course will give you some more upside potential and potentially, greater return. So this is the wishes bucket that can be used for expenses associated with your aspirational lifestyles that reflect your personal commitments and values, such as paying your grandchildren's quinceañera, covering your daughter's wedding, or living, long-term debt-free. Or again, maybe you just, of course, want to accumulate wealth for the future. So that would be bucket number three. And in my opinion, there's really no right or wrong to these things. I mean, some people use a bucket approach like this. Others have done very well financially for many years, and they don't use a bucket approach. So we're not really big believers in, one size fits all planning solution. Our opinion is really do what works for you. But here's the point. Have a plan. So whether the plan is a bucket approach that we've talked about today, or whatever your own strategy is, make sure you have a plan and a strategy. Because, as Yogi Berra said, he's was a famous baseball player, if you don't know where you're going, you're going to end up somewhere else. That's very true, especially with financial planning. So whether you use a bucket approach or not, again, is your choice. But I wanted to give you a little overview of how, at least generically, a bucket approach does work, so you may choose to implement it. To that end, if you would like a second opinion on a portfolio, again, just to get a plan going to help you with your financial future, to hopefully gain confidence, to know exactly where you're going, you can send us an email, cnichols@nicholswealth.com, or go on our website at nicholswealth.com to learn more. Thanks again for watching. Bye-bye.